This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, January 23rd, 2015. Euro dollar. Another day, another decline in the euro, which has broken to now another fresh 11-year low, with the market trading down to as low as 13.15 ahead of this latest minor bounce. Technical studies are severely oversold, and there is risk growing for a necessary corrective bounce up towards previous support in the 17.55 area to allow for technical studies to unwind before the market looks to resume its downtrend. Next key support comes in the form of a 12.50 longer-term 61.8% Fibonacci retracement, while below there exposes critical psychological barriers at 110. Sterling dollar. Cable has taken out the previous the 50.35 low, which had been supporting setbacks for several days, with the market holding by those 18-month lows, but the break has now exposed fresh lows down towards the 2013 base, which comes in at 48.13. Look for any rallies to be very well capped, with only a break back above 52.70 to compromise the current bearish outlook. Dollar yen. Dollar yen has been locked within a consolidation over the past several weeks, with the market now consolidating off fresh 7-year highs that were established in December at 121.85. The trend continues to favor the upside, and any setbacks should continue to be very well supported ahead of 115.55. Only a break below 115.55 would delay the immediate bullish outlook. Euro Swiss. Euro Swiss continues to consolidate after breaking down in the previous week, with the market being defined between 97.10 below and 106 above. A break on either side is now required for the next clear directional bias. Aussie dollar. Aussie dollar has taken out key psychological barriers at 80 to continue its downtrend, with the market now focused on the next measured move objective at 77. Ultimately, only back above 82.95 would compromise the immediate bearish outlook. Dollar CAD. Dollar CAD continues to extend its declines, with the intense bullish price action to plus 5-year highs trading through 124 and exposing psychological barriers at 125. But again, technical studies are very overbought, and there is risk for a short-term correction to allow for these studies to unwind. Look for any setbacks to be well supported into the 10-day moving average. Kiwi dollar. Kiwi dollar has finally broken down this week from a multi-week consolidation, with the setbacks extending down below 75, and a measured move objective is now in sight into the 72 area over the coming weeks. Ultimately, any rally should be very well capped ahead of 78, with only a break back above 80.35 compromising the bearish outlook. SPX 500. The S&P 500 continues to show signs of a longer-term top, although recent gains are compromising this outlook a little bit. Should the market break above and close above the high that we had seen back on the 9th of January at 2069, this would immediately compromise the outlook and suggest that there is an exposed retest of the record highs just shy of 2100. However, inability to close above 2069 on Friday would keep the downside pressure intact and open the door for a renewed downside towards key support, which comes in at 1968. Ultimately, a break below 1968 would be required to confirm the toppish structure and expose an acceleration towards the October lows at 1820. Gold. Gold continues with its surge following the break of that previous October peak at 1256. The market is now looking to establish a meaningful base, and the focus is on a retest of the high that we had seen going back to July of 2014 at 1345. Ultimately, only back below recent lows in the 1200 area, or below the 1217 weekly low, would compromise the immediate bullish outlook. That's all for today.